The world of finance in its highest manifestation resembles a sterile operating room, where the scalpel of logic separates the viable tissues of capital from the necrosis of speculation. An old man, whose gaze encompasses nearly a century of market cycles, looks at the monitors not with interest, but with a deep, crystallized fatigue. For him, having spent decades building the architecture of Berkshire Hathaway side by side with Warren Buffett, the current era is not the dawn of a new economy, but a prolonged attack of collective madness. He has seen bubbles inflate and burst, seen entire generations of investors chase mirages like a herd led by an instinct for self-destruction. But what is happening now under the banner of the digital revolution does not fit into the usual framework of temporary insanity. This is not just another market mania that will disappear as soon as the crowd regains its reason. It is something far more destructive. A systemic poison corroding the foundations of the civilizational order. At the heart of any stable state lies filtration. This man's life is governed by a rigid cognitive protocol consisting of 3 simple but merciless filters. He avoids things of 3 types: those that are openly stupid, those that are inherently evil, and those that make him look insignificant compared to others who have made more measured decisions. Bitcoin is a rare, almost unique anomaly that manages to fail the test on all 3 counts simultaneously with a crash. It is a kind of triumph of anti-intellect. The first reason for its insignificance is trivial. It is absolute stupidity, as the probability of it going to 0 tends toward 1. This asset has, and can have, no intrinsic value. It is a pure abstraction created out of the void. The picture looks grotesque. Mathematical complexity of the highest order is used merely to turn ordinary atmospheric air into a claim on value, while burning monstrous amounts of electricity. When a biological system encounters a pathogen, it either produces antibodies or dies. Bitcoin in this paradigm is a virus that purposefully attacks the financial nervous system of modern society. Its nature is deeply hostile to the institutions that ensure the functioning of civilization, such as the Federal Reserve and national currency. This is not just a technological experiment. It is a malicious attempt to undermine the honesty and control necessary to maintain the social contract. To watch this process from the sidelines is to feel a burning sense of shame that a developed democratic civilization turned out to be less prescient than a harsh authoritarian regime. The Chinese leader demonstrated what can be called intellectual hygiene by simply banning this substance within his jurisdiction, while the West, blinded by the illusion of a free market, allowed the infection to spread, appearing helpless and short-sighted. If one strips away the bright packaging of terms like decentralization and financial freedom from crypto assets, an unsightly reality is exposed. Bitcoin is not a currency in the functional sense of the word. A currency is an instrument of stability that allows economic subjects to conduct transactions without fearing that the value of their funds will evaporate between morning and evening. The price chart of this asset resembles the trajectory of a drunkard unable to keep his balance. It is not a commodity like gold or silver, which have at least decorative or industrial applications. One cannot do anything useful with Bitcoin other than attempt to resell it to another lucky soul who believes in infinite growth. It is not a stock or a bond. No factories, jobs, patents, or profits stand behind it. So what does the camera capture in this sterile office of power? It captures the realization that we are facing a global gambling contract. Bitcoin is a casino operating without breaks or weekends, where the mathematical advantage is always on the side of the house, and the players are involved in a process that causes severe dopamine addiction. It is rat poison in its purest concentration. The most frightening thing about this situation is that the participants in the process are perfectly aware of the product's toxicity, but continue to consume it, watching the rising numbers on screens. This is a level of moral and intellectual degradation comparable to trading excrement on the street. People enter the deal not because the product is valuable, but because someone else managed to make money on it. The system isn't just malfunctioning, it is beginning to actively encourage vice. Opponents of such a hardline stance often appeal to personal freedom, suggesting that people be allowed to do what they want. But this argument crumbles to dust when it comes to the safety of the very fabric of society. One cannot remain moderate regarding a tool that has become the perfect vehicle for extortionists, drug dealers, and terrorists. The success of Bitcoin is the success of the criminal underground. Technology that was supposed to serve progress has turned into a key to safes unreachable by justice. Every new division in the asset's price is paid for by real suffering, which is no longer theory, but has become dry and terrible statistics. In the office, where the air is saturated with the smell of old leather and unshakable logic, time flows differently. The character looks at the world not through the prism of news feeds, but through the grid of fundamental laws of survival, species, and capital. The system he has built over decades rests on 3 pillars, 3 rigid filters that allow entropy to be cut off on approach. The first horseman of the apocalypse is stupidity. In the world of finance, it is measured not by a lack of education, but by the inability to correlate risk with reality. An asset that produces nothing but digital noise, yet claims the role of the foundation of a new economy, is the quintessence of intellectual bankruptcy. It exists only as long as the next buyer is willing to pay more than the previous one. This is the pure mathematics of degradation. If a system requires a constant influx of new participants to maintain the price, it is doomed to collapse. The second horseman is evil. This word is rarely heard in boardrooms, but for the character, it has a quite concrete definition. Evil is that which destroys the trust and order upon which civilization rests. A currency that prides itself on its anonymity becomes, by default, a tool for those who fear the light. It is designed to bypass laws that protect the weak from the strong. The camera's gaze fixes on the invisible threads connecting the bright screens of crypto exchanges with dark basements where extortionists hold hostages, demanding ransom in invisible coins. This is not a side effect of the technology. It is its primary feature. By undermining national currency and centralized institutions, this system attempts to return humanity to a state of barbarism where force and stealth are more important than rules and transparency. The attempt to replace state guarantees with software code that no one controls is an act of aggression against the very idea of social progress. The third horseman is shame. This is the most personal and acute feeling. For a man accustomed to being the most astute person in the room, there is nothing more humiliating than seeing an entire nation or culture voluntarily accept the role of a useful idiot. Observing the global map, the character notes a sharp contrast. In the East, an ancient civilization governed by the heavy hand of expediency has delivered its verdict. The Chinese ban on digital assets was not an act of censorship. It was an act of intellectual hygiene. They saw poison and refused to drink it. At the same time, the Western world, mired in narcissism and false concepts of freedom, allowed this poison to become part of its financial diet. To see the intellectual elite of the West capitulate before a primitive Ponzi scheme disguised in complex algorithms is to feel deep systemic shame. It is a sign of decline when society loses the ability to distinguish real innovation from technically sophisticated fraud. The mechanics of this failure lie in the neurochemistry of the crowd. The system exploits dopamine loops, forcing people to believe in the possibility of bypassing basic economic law. Wealth is created through the production of value. When millions of people start believing that one can get rich simply by owning a line of code, a mass short-circuit of common sense occurs. The cortisol of those who are late to the party forces them to commit even more reckless acts, fueling the flames of the fire. This is a laboratory of human vices, where greed and fear are purified of all impurities. The character understands that the decentralization screamed about by the preachers of the new era is merely an absence of responsibility. In a world where no one is to blame, no one can be protected. The character's investment philosophy has always been built on the principle of exclusion. He does not look for brilliant ideas. He cuts off the idiotic ones. This method has allowed him to survive dozens of crises while remaining at the top of the food chain. Cryptocurrency is the ideal object for exclusion. It does not pass through a single sieve. It is stupid because it is useless. It is evil because it is criminal. It is shameful because it makes laughingstocks out of reasonable people. The camera glides over shelves with historical chronicles. Similar periods have happened in history. Every time humanity decided that the laws of gravity no longer applied to money, the finale was equally bloody. But this time, the scale of madness exceeds all precedents. It is a global experiment in destroying accumulated intellect in favor of digital hallucinations. The tragedy lies in the fact that modern culture has elevated this absurdity to the rank of a religion. Doubting the value of Bitcoin is perceived not as an economic position, but as heresy. This is a sure sign that we are dealing not with a market, but with a cult. And cults, unlike markets, do not yield to logical correction. They only burn down to the ground. In a system where faith replaces the balance sheet, catastrophe is embedded in the very foundation. The character knows that when the dust settles, those who laugh at his old-fashioned ways today will look for culprits on the outside, not realizing that they themselves were the architects of their own collapse. All this shiny digital facade is just a thin film over an abyss into which the first debris of once stable empires has already begun to fall. In the sterile space of intellectual analysis, there is no room for sentiment. Dry statistics and cause and effect relationships rule here. The system that once promised to become an instrument of liberation has in fact transformed into the perfect incubator for the darkest manifestations of human nature. The character sees this not as an accidental code error, but as a fundamental flaw in the architecture. Technology created to be invisible to the state inevitably becomes visible to the predator. The anonymity of transactions, sung as the pinnacle of financial privacy, in reality turned out to be the key opening doors to a new category of violence that was previously technically impossible on such a scale. The camera gaze captures numbers that need no interpretation. In 2024, the Federal Bureau of Investigation recorded losses from fraud associated exclusively with digital assets, amounting to $9.3 billion. This is not just growth, it is an explosive jump of 66% compared to the previous cycle. But the numbers on paper are just the tip of the iceberg, the visible part of the necrosis. Beneath the water lies the true cost of innovation. physical suffering translated into encrypted bytes. Now a criminal does not need to rob a bank or hack complex security systems. It is enough to penetrate the private space of a person holding digital keys. The protocol of violence has become frighteningly simple and effective. Criminal elements no longer waste time laundering bags of cash. They choose a victim, break into their home, and use physical torture as the most reliable method of gaining access. Human flesh turns out to be much more fragile than cryptographic protocol, and under the pressure of pain, any passwords are handed over instantly. At this moment, decentralization reveals its most gruesome side. As soon as assets are transferred to an anonymous address, they disappear into a digital black hole. There is no payment reversal system, no support service, no sheriff who could return the stolen goods. This is the triumph of absolute irresponsibility. The character analyzes this as a new chapter in the history of crime. Bitcoin has become a tool seemingly custom-made for kidnappers, extortionists, drug dealers, and terrorists. It is the ideal medium for international traffic, allowing capital to be moved across borders while ignoring sanctions and legal barriers. What proponents of the technology call freedom from censorship is actually freedom from morality and law. A society that celebrates the creation of such a system as the progress of civilization evokes a feeling of deep disgust in the character. This disgust is amplified by the realization that the creators of these systems are far from fools. They possess outstanding intellect. They created a brilliant distributed ledger technology, which in itself is a triumph of human thought. But to direct this genius toward creating a global casino and infrastructure for crime is an act of supreme cynicism. The situation reminds the character of an absurd metaphor. Imagine someone invented an incredibly efficient rocket engine and decided to use it exclusively to make popcorn. This is not just an inefficient use of resources, it is a criminal waste of talent and energy. But in the case of cryptocurrencies, the popcorn is soaked in blood and tears. Every rise in the Bitcoin exchange rate in this coordinate system works as a magnet attracting new victims and new executioners. Those who call for moderation and regulation do not understand the very nature of the poison. You cannot regulate something that is inherently designed to bypass any regulation. The psychological profile of the system demonstrates a complete lack of empathy. When capital is separated from productive activity, it loses connection with human needs. Unlike classic investing, where buying shares means participating in the life of a real enterprise, providing people with goods and jobs, owning Bitcoin is a bet on someone else's mistake or someone else's misfortune. It is social parasitism elevated to the rank of virtue. The character sees how lives are destroyed, not only for those who became victims of torture, but also for those who invested their last savings in an illusion, becoming victims of their own greed, skillfully fueled by professional manipulators. The line between investment and complicity in a crime becomes dangerously thin. In the finale of this chapter, we see the character draw a harsh conclusion. We are facing not a financial asset, but an existential threat. Blockchain, as a concept, may be beautiful, but its current incarnation in the form of cryptocurrencies is a sewer filled with the dregs of society and technically savvy accomplices. And while the crowd applauds another historical price high, the system continues to methodically grind up lives, turning human pain into digital profit that is non-refundable. In a world where capital has a physical embodiment in the form of factories, supply chains, and consumer goods, the appearance of an asset existing exclusively in the form of electrical impulses looks like a system error. The character analyzes investments not as a way to get rich quick, but as an act of participation in creation. When shares of Coca-Cola are bought, a share in an empire that quenches the thirst of billions of people daily is acquired. One owns real property, trucks, and brands with centuries of history. This is an understandable, tangible process of profit generation through serving the needs of society. Bitcoin, in this coordinate system, represents an industry of absolute emptiness. It produces nothing, provides no services that couldn't be implemented more efficiently by traditional methods, and creates no jobs, unless one counts the army of speculators and those who profit from them. The camera lens impartially captures the anatomy of this delusion. At the heart of the investment appeal of digital assets lies not creation, but redistribution. It is pure speculation, where the only way to extract profit is to find a greater fool willing to pay more for the illusion than the current owner paid. The character calls this digital air packaged in complex technological jargon. The less real value stands behind an asset, the more effort is spent creating an aura of innovation and elitism around it. It is an intellectual facade, hiding a structure identical to the classic financial pyramids of the past. To emphasize the depth of his disgust, the character resorts to a radical metaphor bordering on an ethical limit. He suggests imagining a market trading the brains of newborn babies. From the point of view of the free market, here too, there would be buyers, sellers, volatility, and the opportunity to earn a fortune. But a civilized person rejects such a possibility, not because of a lack of profit, but because of the moral inadmissibility of the process itself. For the character, Bitcoin is on almost the same level of degradation. Even if it doesn't imply literal murder, it facilitates violence, destroys the lives of innocent people, and undermines institutions that took centuries to build. There is a moral line that cannot be crossed, regardless of how much money lies on the other side. The mechanics of this process are described through the prism of social destruction. Unlike gold or silver, which have at least decorative or industrial significance, digital code is useless in isolation from the belief system of its owners. It is a contract for a game where the rules are set against the player. The character sees in this not progress, but regression to times of wild speculation, when the energy and intellect of a nation are spent not on science or production, but on guessing the direction of a graph on a screen. This is a massive leak of human potential into the sewer of a digital casino. The role of intermediaries evokes particular contempt. A consultant suggesting a client invest retirement savings in cryptocurrency, in the eyes of the character, commits an act of professional betrayal. Anyone who recommends an asset with no intrinsic value, whose volatility resembles a cardiogram at the moment of agony, cares exclusively about their own commission and not about the future of the person who trusted them. In the character's coordinate system, the verdict is unambiguous. Such people must be gotten rid of immediately, on the same day. It is a matter of not only financial, but also mental hygiene. At the end of the chapter, the camera captures a monolithic certainty that price and value are different categories. Price is what you pay today, under the influence of marketing and collective madness. And value is what you get in the end. When the dust settles, owners of digital air will discover that they have nothing left in their hands but memories of their own greed. Emptiness cannot spawn wealth. It can only consume it, leaving behind scorched earth in family budgets and national economies. In the silence of the office, where every object has its history and weight, the character studies the most dangerous epidemic of modern times: the degradation of human rationalism under the influence of digital dopamine. Observing the market, he sees not stock charts, but a mass neurobiological reaction. Bitcoin is not a financial product. It is a perfectly constructed stimulus for the primitive parts of the brain. The system functions as a global slot machine, operating 24 hours a day, 7 days a week, without pauses for thought. In this laboratory of excitement, calculating intellect is replaced by the instinct of pursuit, and the realization of value by a blind thirst for possession. The mechanics of this process are ruthless. When the price of an asset with no intrinsic value begins to rise, a short circuit occurs in the consciousness of the crowd. People see their neighbor or a random character from social networks getting rich out of nowhere, and this causes a powerful release of cortisol, the stress hormone associated with the fear of missing out, FOMO. The character compares this state to intellectual degradation. A person sees someone trading excrement on the street and making a profit, and instead of feeling disgust, he begins to suffer from the fact that he himself is not participating in the deal. This herd mentality suppresses the frontal cortex responsible for logic and turns yesterday's investors into gamblers betting their future. 2022 became the moment of truth when the neurochemical high was replaced by severe withdrawal. The system, devoid of foundation, began to collapse, destroying $2 trillion in market capitalization. Bitcoin crashed more than 60% from its peak. But this was only the beginning of a systemic fire. The camera captures the fall of idols. An exchange called FTX, valued at $32 billion, and whose advertising adorned sports stadiums, evaporated in a matter of days. Its founder, whom the press crowned as a genius of the new era, turned out to be an ordinary fraudster, building a house of cards out of other people's hopes. The character analyzes this collapse as the logical outcome of an industry built on lies. The stablecoin Terra USD, which promised safety and predictability, entered a death spiral, wiping out billions of dollars of ordinary people's savings. These are not just financial losses. These are destroyed families, obliterated retirement plans, and decades of labor turned into digital ash. The tragedy is that all these victims were warned, but the voice of reason was drowned out by the noise of dopamine fever. Greed blinds more effectively than any blindfold, forcing belief that this time the laws of economics will work differently. When Bitcoin again breaks marks of tens of thousands of dollars, and funds under management accumulate $130 billion in assets, the character remains unshakable. For him, this is not proof of success, but merely evidence that collective madness can last longer than an individual can remain solvent. History is cyclical, and it has already seen such bursts of hallucinations. Tulip mania in 17th century Holland drove the price of a single bulb higher than the cost of a house, until in one moment the market realized it held only a piece of a plant in its hands. Price is just what you pay in a moment of ecstasy, but it never determines the real substance of an asset. In this chapter, we see a deep conflict between centuries-old experience and momentary impulse. The character emphasizes cryptocurrency is a poison that people buy voluntarily, simply because its price is rising. This is a perversion of the very essence of capital. Instead of fueling the growth of civilization, resources are directed toward maintaining an illusion that will inevitably burst, leaving behind only bitterness and ruin. Capital must serve life, not fuel mechanisms of self-destruction disguised as technological triumph. The intellectual thriller reaches its apogee when the character directly declares, "Trading these assets is not investment. It is the degradation of the moral compass. It is a voluntary immersion into a sewer where every participant hopes to come out dry by using another as a stepping stone. But the laws of biology and economics cannot be cheated forever. A system built on a dopamine void always ends in a crash, followed by a long and painful return to reality. In the silence of the library, where reports on the crashes of past centuries are kept, the character seeks not comfort, but confirmation of the fundamental laws of social dynamics. The modern obsession with digital assets is not a unique event in human history. It is merely a new iteration of a disease as old as the world, for which civilization once developed a powerful immunity. The camera's gaze glides over the chronicles of 1720, when England was shaken by the South Sea Company fever. Just as today, crowds of people, blinded by promises of fantastic wealth, chased the ghost of profit, ignoring the lack of real value behind the beautiful signs. But the difference between that time and the present lies in the system's reaction to the pathogen. When the South Sea bubble burst, leaving behind ruins of family fortunes, the British government did not play at liberal tolerance. It passed the Bubble Act, which effectively banned public trading of shares in new dubious companies for 100 years. This harsh, almost surgical ban was maintained for a whole century. The character points to a startling historical fact. It was during this period of century-long isolation from wild speculation that England experienced intellectual enlightenment, led the Industrial Revolution, and turned into the greatest economic and maritime power in the world. Restriction on financial hallucinations allowed national capital and the energy of minds to be directed into a real channel, into steam engines, weaving looms, science, and empire building. This is the mechanics of state survival. When speculative poison is removed from circulation, the organism begins to create. In modern reality, the character sees a dangerous deficit of such determination. He recalls his manifesto in the Wall Street Journal from February 2023, where he directly and unequivocally called on America to completely ban cryptocurrencies. His position is devoid of nuance, not to regulate, not to integrate, but to destroy as a legal instrument. In this context, he takes a step unthinkable for a Western ideologue, publicly thanking the leader of China for his magnificent example of common sense. China showed immunity by recognizing Bitcoin as an instrument of destabilization and crime, while the United States, boasting of its democracy and free market, turned out to be intellectually weaker and allowed the madness to take root. The free market system in the character's view is not the right of everyone to self-destruction, but an environment requiring strict hygiene. Admitting cryptocurrencies into the legal field under the pretext of freedom is a mistake comparable to allowing heroin to be sold in supermarkets. The character emphasizes the shamefulness of the situation. A country with the best education and developed institutions lost in foresight to an authoritarian regime that simply protected its citizens from obvious evil. This is not a question of ideology. It is a question of the biological survival of the economy. While capital flows into the bottomless pit of blockchain projects, producing nothing but new ways to deceive, the real sector loses blood. The history of tulip mania in 17th century Holland serves as another reminder that price has never been equivalent to value. When a single flower bulb cost more than a prosperous estate, it did not make the tulip valuable. It made society insane. But even the Dutch eventually sobered up. The current world, armed with instant communications and algorithmic trading, is capable of inflating such bubbles to planetary scales, making the subsequent crash an existential threat to the entire dollar system. The character concludes this analysis with a statement that sounds like a sentence. The absence of a ban on cryptocurrencies today is a deferred catastrophe for tomorrow. He sees in this a weakness of political will and corruption of intellect. One who does not learn lessons from the Bubble Act or the South Sea crash is doomed to see their civilization slowly drown in an ocean of digital garbage, mistaking agony for progress. True immunity is the ability to say a firm no to what destroys the foundations of order, even if this decision seems unpopular or outdated. In the final act of this chronicle, the camera captures the character in a moment of supreme intellectual concentration. This is not just the end of a monologue. It is the passing of a final sentence on a system that dared to mask its emptiness as a technological breakthrough. On the threshold of his century, possessing experience that covers almost the entire modern history of financial markets, he formulates a position that excludes any half-tones. For him, there are no promising directions within the crypto industry or useful blockchain solutions if they lead to the creation of surrogate currencies. His view of the world remains binary. Either an action creates value or it destroys it. There is no middle path in matters of systemic poison. Hierarchy of values. The character finally crystallizes in 3 words that run like a refrain through his entire existence: stupidity, evil, and shame. Bitcoin and its derivatives are an investment in literally nothing, in digitized air that will inevitably return to its true value equal to 0. It is evil because it actively undermines the foundation of the monetary system upon which modern civilization rests, and provides an ideal haven for the most heinous crime, from kidnappers to merchants of death. And it is a shame because the willingness of a developed society to participate in this mass, hallucinogenic trip makes us insignificant compared to those who found the strength to ban this contagion. Particular attention is paid to the difference between his critique and the position of his longtime partner, Warren Buffett. If Buffett focuses on the economic sterility of Bitcoin, the lack of profit, dividends, and cash flow, the character goes much further. His protest is not only financial, but also deeply ethical. For him, it is not enough to say that the asset produces nothing useful. It is important to emphasize that this asset actively produces bad things. He sees a direct link between rising quotes and rising suffering, between the technological shine of blockchain and the darkness it conceals. It is not just a bad investment, it is an immoral act. When the character is asked why he cannot be more moderate, he answers harshly because he knows what the ending of such stories looks like. His age and achievements give him the privilege of not caring about appearing modern or progressive to the masses who do not understand the difference between real capital and speculative garbage. He prefers to be right and unpopular than to be deluded, along with millions of people blinded by greed. Bitcoin is not just a market error. It is a flaw in human character elevated to the rank of financial strategy. The final warning sounds as mundane as possible, making it even more frightening. If your financial advisor suggests you allocate a share in your portfolio to cryptocurrencies for diversification, you must not just refuse, you must immediately fire that person. In the character's world, there is no room for compromise with madness. A professional recommending poison as a cure is either incompetent or pursuing personal gain at your expense. It is a matter of elementary safety. Stay away from this casino or prepare to suffer the consequences when the illusion finally dispels. The finale of the story is the look of a man who has done his duty. He exposed the lie when others remained silent for fear of appearing unmodern. He called things by their names: casino, sewer, rat poison. His verdict remains carved in the granite of market history. Capital must serve creation. Everything else is entropy packaged in beautiful algorithms, which will disappear as rapidly as it appeared, leaving behind only the bitter realization of human stupidity. Here the chronicle ends, leaving the viewer alone with the cold realization that true wisdom often sounds like a sentence,